moving average technical indicator for the serious trader. As a serious trader, you already have an existing trading strategy. All you are interested in is how you can combine technical indicators with your trading strategy to make it more powerful in the financial market. As a forex trader, cryptocurrency trader, stocks, commodity, or index market trader, one of the reliable, powerful trading indicator you can combine with your existing trading strategy is the moving average technical indicator. Now, I will show you on this chart how you can combine it, install it. Now, let's get it started. Now, the first thing you have to do is you have to decide the trading platform you want to use. Now, we have different types of trading platform. We have MetaTrader, TradingView, CTrader, NinjaTrader, Trading Station. We have lots more. In this tutorial, I will make use of the TradingView platform. Now, it is almost the same process if you would like to use other trading platform. If you are using the MetaTrader platform, just go to the indicator sectors at the top section of your screen and search moving average. Now, on TradingView, the first step you have to take to apply the moving average technical indicator on your price chart is to move your cursor and select the indicator section at the top of your screen right there. Once you select it right, then you find the keyword MA or moving average. Now, if you like, you can search moving average. That is all. Now, searching the keyword moving average will pop up different types of moving average technical indicator. Yes, I created a video, a full tutorial video on TradingView on how you can start using it as a beginner trader. TradingView, it's a powerful trading platform which has a lot of features which you cannot compare to other trading platforms, especially MetaTrader. So TradingView is superior, by far superior to MetaTrader. On your MetaTrader, if you search moving average, there is a higher chances you would find just one moving average, but on TradingView you find lots more different versions of moving average technical indicator. Now, in this tutorial today, we are going to use the moving average simple. Yes, moving average simple. Once you select it, by default the moving average simple will be pasted on your price chart. Now, we are not done. We still need to modify this technical indicator to give it the best look, or to make it right based on our trading principles or the type of trader you are. Now, what you need to do now is, first thing, you have to modify this indicator. First thing is you place your cursor on this moving indicator or the moving average indicator. By default, it has a blue color and a very thin line. Now, you have to modify this indicator if you don't like it the way it is, right? For those who don't have the powerful eyesight to view tiny objects or maybe color variations issues, now what you need to do is to click on this indicator. Once you click on this indicator, you will see the settings option pop up at the left corner side of your screen. This is it right there. This is the setting box. Alternatively, you can just click on the indicator and then right click. This will bring out the settings options for this moving average technical indicator. But the fastest way to set your moving average technical indicator is to just click on it. Once you click on the moving average, then go to the left side of the top of your screen and then click on the settings icon right there. Once you click on the settings, then you will see the settings box for this moving average simple indicator. Now, we have different settings options right there. The first thing you see is the input, which houses the length, source, offset, and more parameters. Now, we have the style, this where you can change the color, the size, the thickness of the moving average. And we have the visibility. This means you can decide the time frame you want this moving average indicator to be presented on your trading chart. Now, let's get back to input. On the input, you have to change some parameters right there, but we are not going to do that for now. First, let's go under the style to change the color. First thing. Now, if you don't like the blue color, you can select any other colors of your choice. Now, let's use black for this tutorial. Once I select black, you can see the line has changed to black. Now, This line is too thin. We want to make it to be more thick. Now what we have to do is to click on this box right here. Once you click on the box, you move your cursor all the way down, and then you tick under the thickness section. Now if you tick this section right here, you see it becomes thicker. You click the next one, thicker, the next one, thicker. Now let's leave the on the third section, so that is thick. You can as well change the line to dotted lines like this, or you put just normal line. Now that is the line style. Once you are done with that, then that is all. Then you can go back to the input and change the parameter settings right here. But before we change this parameter settings right here, let me show you how the moving average works in the market, so we can decide next what are the settings which is suitable for it based on the type of trader you have. Now, how does the moving average technical indicator works? As you can see right here, if you pay attention to this indicator, you are going to see whenever prices crosses above this indicator, price go all the way to the upside, and whenever price crosses down below, price go downside. You can see prices cross up, it goes up a little bit, it crosses down again, it continues all the way down. You can see that. So the idea behind the moving average technical indicator, it is an indicator that follows the direction of price movement. Now it shows you how price is changing from the buyer side to the seller side. Now this indicator, it's a powerful trade indicator which you can use to ride trend, especially if you are a swing trader or a trend riding trader. You can as well use it if you are a scalper or a day trader, but it's primarily used by traders who loves to follow trend. It helps them to identify the beginning of a new trend and the end of an existing trend. Now you can see that in this market, you can see how it keeps on following the bullish trend. Likewise, at this section right here comes down. When the short bearish movement came to an end, you can see how the bullish engulfing closes above, and the moving average shows you yes, buy sentiment is now building up. You can see how price continue. You can see as well right here, after the counter trend or the corrective move was over, the bullish rally continue right here. You can see right here when price got to an extreme point, price crashed all the way down, and as you can see, after price closed below this moving average, price went all the way down. So this is how this technical indicator works, but it is not so simple the way I presented it right here. There are still some settings you have to combine based on the type of trader you are. Now that we have known how this indicator works on the price chart, the next thing we have to do is to go to the settings so that we can set it to suit the type of trader we are. Now before you can set this indicator, there are other things you need to understand. Now let's go back to the settings box. Click on the settings right here. Now you can see we have length, source, offset, and there are more settings right here. To be sincere with you, the only settings you need right here is the length and the source. You can leave the source to be close, and the length can change based on the type of trader you are. Now before you can change the length right here, the length right here is in reference to the period. That is the numbers of candlesticks you want to calculate before you can make decision. Automatically, the moving average technical indicator will do this calculation for you based on the numbers of length you input right there. So it's an automated indicator that calculates candlestick movement based on the references you set right there. Now before you can set these numbers right there, you can't just go on putting different numbers of your choice, just putting anything right there. It has to be in reference to the type of trader you are. Now when you went through your beginner stage of trading, you were being taught that there are different types of trader based on scalper, day trader, swing trader, and position trader. So these are the 4 types of technical trader. Now for you to use the moving average technical indicator, you need to know the type of trader you are. Now let's get back to the foundation of the type of trader we have. Now based on the type of trader we have those who we call the scalper. Now scalp trader. Now the scalp trader, these are traders who wants to make money within a short period of time. Now what this trader does is they start their analysis from the 4-hour chart and then all the way to the what? Some could go all the way to 5-minute chart. Yes, but I do advise traders to try to stick on the 15-minute chart. So try to do your scalping on the 15-minute chart. Going to the 5-minute chart will be too crazy. You tend to see a lot of false movement in the market. So taking a lot of trade doesn't mean you have more winning trade or more good trade. No, quality is better than quantity. Now the next trader we have right here is who we call the day trader. The day trader, these are the type of trader who primary aim is to execute a trade, and before the close of each daily trading activity they have to either close their profit or close their trading loss. Now this type of traders start the analysis from the day chart all the way to the 15 minutes for their entries. Some may use 1 hour depending on the type of trader based on quality setup they look out for in the market. Now we have those we call the swing trader. Now the swing trader, these are trader who wants to hold position for days or for weeks. Now this trader start the analysis from the weekly chart and they go to the 4-hour chart for their entry. Right, the 4 entry is the primary time frame of entry, but sometimes they may combine the 1 hour if the 4-hour candlestick is too far, or if the price have moved too far more than their risk tolerance. Now the last on the list is the position trader. These are the big guys, the hedge funds, the banks, the big organizations who trade millions and billions of dollars. To be a position trader, you are not trading for survival, you are trading to grow wealth. Now position trader, this type of trader, they focus on the monthly chart for their first time frame of analysis, and they go all the way to the day chart to make their entry. Now based on the 4 types of trader we listed right here, this will help us to determine how we use the moving average technical indicator. Now let's proceed further. Now that we know the 4 types of technical traders we have and how this technical indicator, which is the moving average, works in the market, the next step is now to proceed to how each of the 4 traders we listed, how they can use it to trade in the market. First, let's start with the scalpers. I told you scalpers, they will start their analysis from the 4-hour chart and they go to the 5-minute chart or the 15-minute chart to execute their trade. They can start from 5 minutes for trade entry, but I advise you try to take it to 15 minutes so that you can avoid a lot of false or weak setup. Now, as a scalper, this is the day chart. This is by default, this is what you have right here. So the first thing you have to do is to switch or edit or modify this moving average. You change the length. We already changed the colors and the thickness. The next thing is to change the length. Now we go under the settings. Once you click on the MA, you navigate to the left side of your screen. You click on the settings section right here, and then you come to the settings of the pop-up right here. You click on the input section. Under the input, by default 9 will be right there. You cannot use this 9, so you have to use 10 length. So you use 10, and then you leave the source to be closed, and then you click on OK. Now once you do that, this is now okay for scalpers. Now as a scalper, you are not going to make buy or sales on the 4-hour chart. Instead, what you need to do is to go to the lower time frame. Now let's go to the 5-minute chart and see what we have on the 5-minute chart before we move to the 15-minute chart. So here comes the 5-minute chart. Some traders will prefer to use a 5-minute chart, but again, this is an advice. I will advise you, stick to 15-minute chart to scalp for your entries. Right, so let's check the 5 minutes how it aligns. You can see we can hardly see a kind of a very high probability trade setup right here. You can see within short time the market is up, down. You can hardly survive right here. Number one, you execute a lot of trade if you follow this signal right there, and then number two, you pay a lot of money for spread, commissions, everything. Your broker will actually be happy if you execute multiple trades daily, because the more trade you execute, the more commission they charge you. So the best thing you can do is to use the 15-minute charts so that you can reduce your quantities of trade and then focus on quality trade setup. Now we go to the 15-minute chart. Now what you have to do is to look out for what we have on the 4-hour chart. Now if the 4-hour chart is telling you that okay, on the 4-hour chart, no, the market is bearish on the 4-hour chart. Once you see a 4-hour chart, then you go to the 15-minute chart to see how you can continue a downward price movement. For example, in this market right here on the British pound sterling paired against the USD, we can see right from this peak here, we have our high. Let's change this color to black. We have our high right here, and we have a higher low right here. We have price taking out this higher low, retest, pushback, we have a break of structure, and we have our low high structure right here, and the price is currently retracing to this level. And if you check out the Fibonacci level right here, you are going to see this aligns to the 0.8 or 0.786 premium level. And this is why I said moving average can be used for traders, or can be used by traders who already have an existing working trading strategy. Don't ever think of you want to use this trading strategy to trade all alone. If you do that, you waste or you blow your account, right? Don't do that. You only combine it as confluence factors with other trading strategy you already have, right? As you can see right now, I went through the market structure. I studied the recent highs, the lows, the break of structure. I applied my Fibonacci to see the premium level, discount level. And then now, after I've seen the market structure shifting to the downside, and I can see price is gets rejected at the premium level of the Fibonacci. Now what I'm waiting for carefully is to see how price will close below this moving average, right? Close below this moving average, there will be trade. In fact, those who are trading on the 4-hour chart can use this setup right there. But as a scalper, you want to go to the lower time frame and see what you should be doing, because right now we are seeing that, okay, those who want to make entries on the 4-hour chart, like the swing traders, they are actually looking out for sell. So it will be better for you as a scalper to also look out for possible sell. Now what you're going to do now is to just go to the lower time frame. So we already have our Fibonacci like this on this downward movement, and then now you go to the lower time frame to see how you can capitalize on early sell entry. Now you can see right here, price is still going upward in this bullish rally on the 15-minute chart. You can see, but on the 4-hour chart you're going to see the whole chart, but on the 15-minute chart you're going to see a lot of smaller movement turning into bigger movement, and this is why you have to start your analysis from the highest time frame of the type of trader you are. So based on what we have right here, we can see price crash all the way down here. Now based on this setup right here, those who want to scalp have already missed this sell setup. If you were a scalper in this trade, the best zone for you to make your sell entry could have been at this zone right here, when price push back or when price crash below this moving average right there. Once you figure out on the 4-hour chart that price has retraced to a potential sell level, you come to the 15-minute chart and see how the price will close below the moving average. Then once you see that, you look out for your sell. So you are not just making decisions based on one particular time frame or based on one indicator all alone. You are also combining other confluences like top-down analysis, like your Fibonacci, like a market structure. As well, you can combine support resistance to make it more reliable, and then your moving average will come as the last factor, which would be your confluence, to increase your confluence right now. So the best zone to sell in this market would have been at this zone, the first breakdown right here. If you are that patient trader, you could have made your entry at the retest of this moving average. If you are that aggressive trader, you make your entry right here. The conservative trader, you wait for a bullish pullback, you make your sell entry right there. You can see that. So the moving average is a very, very good indicator. And the another thing you can do is you patiently wait to see how price will go up a little bit and then close down to continue the downward movement. So that is how you scalp. So let's go out for more scalp on this market. As the market was going up for retracement as a counter trend on the 4-hour chart, you can see how the 15-minute moving average was giving us confirmation for buys. You can see series of buys. Whenever price crosses it up, you always go for buys, and your stop loss will be below the swing. You can see right here, buy, your stop loss go below the swing. So this is what you have. You put your entry, you put your stop down below. You can see that you write the trend all the way up. You put your entry, you put your stop down below, you write the trend up. As the market keeps on going, you keep on riding. Right there, you make your entry, you put your stop down below. The market will eat you right here and eat your stop loss. Of course, you shouldn't expect all the time you have a winning trade, and that is why you have to manage your risk. So at this zone right here, price goes into consolidation. I told you you can't use the moving average in this type of market. You only use it in a trending market, right? So right here, when price breaks out, you wait for it to come back, and then once it gets rejection, you then make your entry right here, and you have your stop loss below the swings right here. So imagine you were in this trade when the market went all the way up. You could have bargained 3 risk to 1 ratio. If you prefer or you wish to ride this trend or more for profit, you should have trailed your profits to this section right here before the market keeps on crashing down to this section right here. So that is how you use the moving average in a downtrend market structure. Now, in an uptrend market structure. Now let's look out for a downtrend market structure. So in a downtrend market structure, it is you reverse the case. You can see in a kind of a sideways market structure, you can use the moving average. If you use that indicator, your account is going to bleed, right? You can't use it right here. Instead, you look out for it to break all the way down as it keeps on retesting the moving average as a dynamic support. Then you keep on looking out for sell all the way down, and then when it closes above right here, it comes all the way down. You look out for your sell, you put your stop loss above right here. The market would have caught you out around this zone, and then when the market came all the way down again, you could have made your entry, put your stop above. Now let's see our entry here. We put our stop loss all above. Then you could have gone down with this market all the way down. You would have gotten a lot of that would be 3.1 risk to 1 ratio, right? So the moving average, it's a powerful trading technical indicator if you can combine it with your existing trading strategy or you combine it with raw price action. So you use the crossing over of price above for buy and the crossing over of price below for sell, but you have to take note of what is going on the higher time frame. Now, as a day trader, you go to the day chart, then you change your moving average, you change it to 20 period. So that is just the difference right here. It's still the same tactics you use for scalping, but the difference is just the time frame. So for the day trader, you change from 10 to 20. Once you do that, then you see everything is going to change from the day chart. Then what you have to do is to go to the 1 hour chart for your entry, and then you can see how it aligns properly. So you ride the trend, we are in an uptrend market structure. Whenever price crosses above, you can see in this downtrend price movement. Let's analyze the market structure. We broke this low right here, we broke another low right here. We know we're in a downtrend and the price closed above again. We expected price to come down. No, instead price came and tested this zone. We're not sure. Price went up again. After we can see price broke this structure, break of structure, we have a higher high, price push right here. It serves as a dynamic support right here. The trend goes up, you can see that. So that was a choppy market structure right here. You were not sure what to do, but by the time you saw this bullish engulfing right here, you could have made your entry, place your buy right here, and then put your stop down below, and you ride the trend all the way up. You can see that. You can see that will be massive. In fact, that was a spark. So that could have gotten this 3 risk to 1 ratio setup, no profit if you use the 3 risk to 1 ratio, and if you use 2, good. If you use 4, you should trade your profit. You can see that. And after price got to these zones right here, we have a higher low structure right here, and we have equal highs. We have a sweep right here, a sweep at the top. Price broke this higher low, we came all the way down and we pushed back again right here. We had our first low high, price closed below this moving average again. The aggressive trader might have gone short at this level right here and they ride all the way down. That is almost 4 risk to 1 ratio. In fact, that is 4 risk to 1 ratio. You can see the moving average is a very powerful indicator, and then again we look out for more sell as it keeps on crushing down, pushing down the moving average. We put our stop all above and we keep on riding all the way down. At this level right here, it goes up, it push down, you add another sell right here, you put your stop loss above, you ride it all the way down because you are following the market structure, right? And before you do that, you have to also pay attention to market structure. You can see right here, we got a break of lower low right here, telling us, okay, we retested this break right here in combination with our moving average. You can see we have a lower low right here. We broke it for a more lower low. You can see retest of structure right here. We get all the way down. And right here, you could have gone short right here, place your stop loss right here, and the market will take you out. So you don't expect all the time you have a winning trade. That is why you have to manage your risk. So that is how day traders use the moving average. So the difference right there is just the time frame. Now look at this market structure right here. This type of market structure, you try to avoid it. It's like a kind of a choppy or rangy market structure. You can't trade it. Now these are good structural formations right here. You can see, we can see right here how the market move from uptrend to downtrend and back to uptrend. Let's quickly go through this. Now imagine you are a day trader. From this downtrend uptrend, you can see the moving average is a very powerful indicator. You can see how it keeps on going up, closing all the way down, keep on selling all the way, stop loss above, entry down, stop loss above. When it closes down, you say your sell. All the way it touches right here, comes down, you break your sell, and now let's study what we had right here. This is our last low high, price equal this low high right here, and you can see we have an equal lows right here. Now stay out of the market at this zone because we are now having balance between buyers and sellers. Now we continue to the right side. You can see now we have a retest right here. You might have gone for your first buy entry right here and then put your stop all the way down, trade your profit, and then again second buy right here, place your stop loss right here. Now imagine you bought right here and you place your stop loss at this low, you ride it all the way up. That is massive 2.8 or 3 raised to 1 ratio setup. You can see again how price closed below this moving average right here. The aggressive trader might have gone short right here. Those who are aggressive, those who are fearless, they've gone all the way short, all the way down. That is almost grouping 5.5 or going to like 6-7 risk to reward ratio setup. And there, as the market keeps on proceeding down, you can see we having it as dynamic resistance. You go for your entry right here, you put your stop loss once again, put your stop loss above, you ride it all the way down. At this zone right here, you can see this nice close of price. This is a nice powerful sell right here with your moving average indicator. What you're going to do right now is you put your entry right here, you put your stop loss above, and then you ride all the market all the way down for that is 2 raised to 1 ratio setup all the way down. So this is how you use the moving average for the day trading concept. Now for the swing traders, you go to the weekly chart. Your weekly chart, you analyze the market, direction of the market. You see it's bullish, it's bullish. As a swing trader, you should be looking out to go bullish on the swing right here. You look out for buys when the EM moving average gives you a buy on the lower time frame. But right now we are seeing kind of a consolidation going on at this zone, so you are very careful. Consolidation is going on the weekly chart. Now what you need to do is to modify your moving average and then change it to 50. So as a swing trader, you use the 50 length or the 50 period. Once you are done with that, you can see right now the moving average is telling you, based on the swing trading concept, the market is still bullish because the market is currently above the moving average. It's telling us market is still bullish. Now let's go to the lower time frame and see how we can capitalize on bullish setup. Now as a swing trader, your time frame is 4-hour chart. Now on the 4-hour chart, what can you see? You can see on the 4-hour chart we have a kind of a messy market right here. And see that consolidation, you stay out of this. If you try to trade this right here, it's going to be very difficult. The only zones you can use for buy right here is price closes above right here. You put your stop all the way down. If you are trading on the 4-hour chart, this type of market right here, you only look out for sell. If it eventually close down again, you put your sell right here and your stop all above. Now if you are going for sell as a swing trader, you have to know your stop losses have to be very wide, but this zone right here you stay out because it's kind of a sideways. Now this is another good example of a good zone to buy. You can look out for buy right here at this zone right here, kind of a consolidation choppy. These zones are good buy, put your stop loss below, good buy, it breaks down, and then consolidation going up again. We are confused right here. Now you go all the way to the other charts, you can see these are good buy zones. Now what you need to understand as a swing trader is, as a swing trader, you have to wait for a longer period of time before you can see a trade. So that is why you see on our moving average, which is the 50 length, we were unable to see more trade like when we trade like a day trader or like a scalper. So that means as a swing trader, you don't expect trade every day. You could see one or no trade weekly. Now these are good buying zone for swing traders. These are good buying zone for swing traders. You could use this as a trade, put your stop down. So your stop be at the swing to be below your swing. If you are buying right here, I can't see a strong bullish close of candlestick. Only at this zone you put your stop right there. You see trade some profits, right? So the moving average, it's a very good indicator if you know how to use it. Right here in a downtrend, you can see we close all the way down. We place our entry, we put our stop loss above. We roll the trend all the way down, retest right here, we rolled it down, retest closing below, we rolled it all the way down, our stop all above. You can see that. So the difference right there is just the length you use. So for swing trader, you use the 50 period. Now let's see how position traders can use this technical indicator to make trades entry in the market. Under the settings, you change the length to 100 because you're a position trader. You want to wait for weeks, months before you can take trades. Now you can see this is a 4-hour chart. Now we go to the day chart. As a position trader, you look for entries on the day chart. Now you can see as a position trader, you can see how good this moving average plays out. You can see buys right here all the way up, buys right here. There was a buy right here, but you got to be very careful because we broke this higher low, and this is the retest. And this is why I said you need to combine other factors with the moving average. Don't use this as a standalone trading concept. If you do that, you waste your money, right? You can see right here, it breaks all the way down, we push back, buy, stop loss down below. Right here, buy, stop loss down below. So as a position trader, if you use this indicator right here to buy at this zone, you are still in this trade right here. Now let's move back to the left side. This is a nice buy for position trader. And then we go right here, you can see nice sell right here, another nice sell retest, another nice sell retest. It wipes all the way down, comes down, nice sell right there, stop loss all above, stop loss above. Now we can see how this bullish market structure switch into downtrend. From right here, bullish setup, stop loss down below, bullish setup right here. There isn't any strong bullish close of price above this EMA. But let's imagine you bought right here. Let's just say, okay, you bought right here and you put your stop loss right here. The market will eat you out. Then the market turns into a downtrend market swing. You can see that. So right here, you stay out, but there is a good entry right here. You can see. Now, what you need to pay attention to is the volume of candlestick closing above or below the moving average. That would be your final entry. You don't want to see tiny or small or candlestick with upper shadows or lower shadow penetrating into the moving average. You want to see candlestick with large bodies penetrating, closing above or closing down before you can make decisions with the moving average. So now you have it. This is how you use the moving average indicator. The difference right there is just the time frame you combine. You need to understand that the time frames you combine based on the type of trader you are. This is what determines what you need to do as a trader, right, using the moving average. So if you found this tutorial helpful, give it a thumbs up, like, share, put a comment down, subscribe to the YouTube channel, and as well suggest any topic you'd want me to create a content all about in the next video. I'll see you in the next one. Peace. Use the link down below to subscribe, like, subscribe. Use the link down below to join our mentorship programs, right? Our trading signals mentorship programs. We are located in number 64 Mokola Road, opposite State Veterinary Hospital in Ibadan. Mentorship is available for non-residents of Ibadan and those in diaspora. If you are not in Nigeria, we have mentorship services, online training, online live interactive class, and after the class you also have version of the class that is we record each class we do hold. So after the class, maybe you miss the online class, you can have your hands on the recorded copy, right? We'll see you in the next one. Peace.